Welcome to TradeTheMBA.com. This is John. This report is for the 18th of December, and it's always interesting to look back because we talked about this when we were ending September, and I was warning even from August. We were expecting dramatic increases in volatility, and while it was to the upside in September and August, we clearly pointed out this lovely DOC spread that took place right at the beginning of October. And we were expecting a significant October, and sure enough, October was quite dramatic. I mean, going all the way from that, the highs, literally, we caught, not the exact high, but 29.35.50 from 48.75 is pretty darn close. I mean, that was the close of that bar that gave us a beautiful DOC spread. Everything that we look for from the intraday charts with the green, you had the rejection and everything of the green sign and that. So when we opened the next day, everything had pretty much clearly formed it. And we had already had lower peaks on higher highs from a shakeout standpoint, and the cascade from there began. But more importantly, the recent one, also identical to the same construct. And this cascade, and again, we've been talking about this 23% that started from all the way up here and began to move lower. And then once we kept coming up against that 23 and couldn't get over it, we had an opportunity where there was the beginnings of a bullish move and an immediate rejection. And I point out this intraday too. It's not exactly a short signal in the sense that you have a closing mount, but what it's saying is to you that bulls don't have the strength to push. And so when you have key resistance points and you see that kind of level, and we'll show this on a 5K because I pointed out a beautiful one intraday where we were reaching pullback to the 50% and we had this very rejection. And I said, that tells you it will not hold. And having that information and knowing beforehand is so critical because so many people talk about these Fibonacci lines or support and resistances. They're only support if you can actually show that someone's there to buy. Because as I've said over the years, for a couple of decades now, lines don't buy stocks. People do. Or in this case, computers do, which are backed by people. And this is the quintessential point that if you don't have a showing that someone's interested, we already knew that once the 2600 broke, we weren't going to be supporting anything until we got all the way down. And the reason we have that 2552 marker was kind of the range I had, which isn't exactly is more a mathematical based number because we had these tails from earlier in the year. If I go back just a little bit more, you can see the dip came, and so the actual lows, we're right in the 40s. Having a little mouse issue there. Okay, here we go. Yeah, around 46-ish was the dip down of these lows coming back from February. At the beginning of the year, we had these other little tails, which mathematically came in for me around the 52-ish 3 range. And I was warning intraday that, hey, when you get to those levels, you're going to expect that the bigger boys are going to want to bite because from their standpoint, it's like, okay, I've got the lows of the year, might as well begin to think about something at that particular point. And sure enough, it's no surprise that we're right at those numbers for a bounce back, even though the tail moved lower and made a new low. You still ended up with exactly that similar configuration. It happened very quickly, and I warned everyone that it would, because when real money comes in, given the lower liquidity that we've seen, and the lower liquidity is mostly just people afraid to catch the falling knife, so to speak, afraid to buy into that. Even the NASDAQ made new lows, so there is a convergence there, even though it's not quite as deep. We had a little bit of dislocation that the NASDAQ was forming a much better support overall than the S&P was, even though it was mimicking the readings of weakness. It nonetheless was supporting a little bit stronger on that. The euro still maintaining its flat curve despite all of the goings on, and of course the flight to quality. This is really an indication that when you see the bonds that the Fed has an opportunity to save things by not raising rates. Will they do so? That remains to be seen. The lower activity of oil is both a supply as well as perhaps a demand question. We have a little bit of fluctuation in both those situations, and of course the defensive move into gold, not a complete shock. So we moved to the intraday, and started out beautifully, but it's so important to understand that macro issue of if the Fed chooses not to raise rates suddenly, because that's about the only thing that's going to save the market at this particular point, that will create a massive short cover rally as well as actual buying, because it would mean that you're not going to have this continued pressure against real estate and all sorts of other things that are the economic engine. You would think that they would, after all these years, figure out what happened in 2008 and how they're similarly doing exactly the same thing, but maybe not, because perhaps they don't want the growth. We knew they didn't want it because they started raising rates arbitrarily as soon as Trump was elected, irrespective of economic realities, which was always an interesting thing. So you know there was some political element to the whole move. So here we had the start of the day, pre-market. You know, this is one of those setups where right here, where we end up with very similar configuration. The only problem is that when you have a crossover take place before and then the secondary crossover, meaning so the orange crossing above the steel, but at that particular point you also have the green crossing slightly below, but the green doesn't move below red. These can kind of tend to run to the upside. And you can see that it did move straight across, even when we had the steel moving below cyan. You know that presents weakness, but it's not as cleanly defined. Of course, you could take the beginnings of that bar as we ended up right at that 2613 break, which I did at that particular point. But the clear indication came when you ended up with the orange-green rejection and the rollover of the steel. Of course, it was the next bar that gives the cleaner sign, even though you had green rising back above. I tend to look at also my MBI in this particular case. But I had marked this short and had pointed it out on the Skype chat and the follow that went with it. And then the secondary one right here, this is very similar to what we saw from a daily. Now, the daily orange had dipped much closer, but here we ended up with much higher rejection. And I was like, oh, that's a perfect opportunity. And people are like, but you're right near the lows. Well, this tells you that those lows aren't going to hold because you've got no buyer support at that particular point, at least from a ratio standpoint, which is what the whole orange is telling us, because when it's caught between the cyan line and red, you have continuation. And continuation is exactly what we got. Now, on the lower moves coming down here, even though we started to get some of the configurations for the buy, when you're this far below the negative 13.5, if I don't have a close over the 23%, I'm far less interested in those. It's when I start to see that shakeout rise as we came here, and I was pointing out, hey, from the secondary one, it's worth taking some of those gains on a move down below, because as we start to improve with the shakeout is when you begin to have a little bit more of a breakout move. And I had the higher one because of the higher entry that was really basically saying, hey, prove that you can take out the 23% and we'll go from there. And it did. And in that particular case, whether you go long from there or not, that's to me always a strong play, because I'm of the mind, it's like, okay, if I'm willing to get out, then I should be willing to go the other direction. And of course, it worked out okay, but we ended up with a additional secondary short, which is, this is that beautiful crossover that we look for. In this particular case, green was already below red, so you don't get as much of a fervent breakdown. What I love is when the green is above and it crosses below, but nonetheless, you know that you're still in weakness with the green below red at this particular point. And it came down and then it reversed pretty quickly, which is not a big deal. That happens. That was like a 3.5, 4 point move, but produced a beautiful buy configuration within that. Even if you waited for the full confirmation on this bar, confirmed itself again secondarily with the cyan below and produced a very decent setup. But here's where you have that orange from above. The problem with this one is that You don't have the steel coming above, but what I like to see is this configuration where at least they make an attempt to meet. And this shows the further rejection took place right with the steel in the opening of that mouth. If you imagine that to be a snake or a mouth, that then the tongue comes through. And of course it produced the DOC spread, which there were still several bars to enter short configuration from there. And that produced a nice little dip coming down. Didn't even mark it because it wasn't really necessary to go through that. And then we ended up with the cleaner one right here where you have the green going below, steel crossing. Now, for some, this could be a little too early because, again, you don't have it crossing the red. What I liked about it is when you have flat red already detailing to you that there's a bit of softness, that there's not this massive, it's not like one of those strong angle moves going straight up where you're indicating, robust strength. Even if you waited to the next bar for the DOC spread, fine. Still produced the exact same results. And this was a massive move because, again, we could see with this lack of a steel reset, even the dips below here without that reset and being this far above, unlikely to support. Now, I mentioned that when we started to reach the secondary low, we noticed strong improvement in the shakeout. It had almost gotten above 13.5, and it's like one of those where it's, okay, 40 points. I'm not going to object to 40 points. There's going to be additional entries on any little pop. We'd already reached below this negative 21. When it happened down here, we were in massively declining shakeout, so it was less of a concern. At this point, you're right at the threshold of the negative 13.5 and 1 bar, and you can pop up and make it all the way past. So it's always, at that point, prudent is what I say. You don't have to capture every single tick of it when we're capturing these kinds of points, because at this point you're already over 60 plus points just from the two shorts, another 20 plus from you're at 70 points, and we were like barely mid-morning. We ended up with another little short that made the lows, but you can see this is where the shakeout starts to move above, and you're like, okay, hey, we'll be a little more defensive with that. Change anything there. What we ended up with is still a whole lot more flatness because with the declining lows of the Morganacci, I'm always concerned that I'm going to get a pop-up that's going to try and pull myself up to those, so I tend to be a little bit more cautious with that. That's just prudent. There's nothing other than that. Really, we were still in a continuation mode. We ended up, though, with another beautiful configuration here. Green crossing below with the orange above, and steel crossing below the cyan. With the trajectory, what I'm anticipating is that I'm going to get a follow-through. If I don't get the follow-through of the green moving below red, then you kind of get an idea that you're probably going to have to get out of that setup. But in this particular case, 1 bar later made a little bit more of a high. I mean, if we compare these from what the close, 63.25 to 64.5. So fine, you're going to take a 1.25 heat from that kind of situation. If you can't handle that, you shouldn't be trading. And from there, there's nothing to do but to just follow it along. And made new lows, continued to make new lows. And then we started to see that we were well above that negative 13.5, and I was pointing out, because now we had reached that magic 40 to 50 range, and I was like, hey, you got to be prepared for pops coming through at this particular point. So at that stage, getting a P2, you can see significantly improved DOC readings, and it's like, okay, fine, they lock in another 20 plus points. And at that particular point, not prepared to quite go long immediately on that. Once you go to positive shakeout, though, certainly much more reasonable to do. The conservative approach would be to wait until you get much stronger configuration, which would be the green above the cyan, and at 38%, very safe to play that between the two ranges from a stop standpoint, but certainly definitely could have gone a few bars earlier, just below the 23 after exiting. Above the 23 right over here. to get in. So my point being is that there were multiple places that even if you missed the beginning of a long, there's still usually places that you can get in, even if you need to wait until cyan is below red, which right over here, still, and at the 50%, gave a beautiful run. I mean, even from where I had marked it and put it on the Skype chat at 25.46, you're getting a move to 69. So it was just so much happening. It was too easy not to even have to worry about it. This was a continuation that was going on through the end of the day. I was trying to post it on Skype, but it wasn't letting me type in words. I could put up the picture, but I couldn't type anything, and sometimes the Skype does that to me. I don't know why. Regardless, we kind of reached a peak here. Post-market, probably West Coast would have been okay to still be with this. Then we ended up DOC spread, pretty much right below the ABM. And it produced a nice downdraft. It was still solid with the steel underneath. Not much of a concern. You kind of knew that you were ending your short run with that steel crossing the red. We like to point that out. It's kind of your warning. Hey, you had your dip. And in this particular case, anytime the steel is down below, I'm always more concerned about a turnaround play on that anyway. And at this particular stage, we're looking at having reset and an opportunity for a new run. This one's made a little bit lower, and you can see we're getting a bit of spidering in that. So we may see a bit more of a pullback. And probably around 50% of that. The fact that we haven't matched the highs would be problematic for it. And again, we're going to be looking at those same levels that we've been marking throughout. From a daily standpoint, I know this has gone long, but so much information and powerful stuff to be able to use. Intraday trading in that, just a staggering sum of points that can be accumulated in such a short time. This is where most people run from the market, and you just can't do that because you can make, just in these last 2 months, it's just been years of gains available in just a couple of months, and you got to love it when that happens and able to see it. And that's the beauty of it. It's so clear. And so I want you to make sure that you're looking at those and that you see that this continued cascade. Now that we don't have a big separation between the red and green, I would be a little more apprehensive about being hyper aggressive that you're going to continue to break down, but it's still within the short configuration. You can see short-term buyers attacking a little bit on there. And this has been a very strong move. I'm not seeing any new short activity because they really don't have to. The market is falling under its own weight of lack of buyers, and that makes a significant play. So, as always, though, trade well. I will keep putting up on the Skype chat if it lets me type stuff. Otherwise, I'll still just keep dumping pictures up there with as many arrows and markers as possible. Trade well. We'll talk again later.